With COVID vaccines finally rolling out, it's only a matter of time before restrictions are lifted and we're able to get back to traveling. With pent-up travel demand at an all-time high, it may be safe to expect a large return to travel later this year, which bodes really well for the airline stocks that were hit so hard in early 2020. And for these reasons, investors have started hedging their bets on a resurgence in airline activity, pouring money into stocks like Delta and American Airlines, or funds like the JETS ETF, which holds a basket of 40 stocks from the airline industry. But before you follow suit, you'll want to watch this video in full to learn about what might be an even better strategy for an airline recovery. In this video, we'll be talking about AerSale, ticker ASLE. Analysts are predicting a 100% upside on this stock, which gives it the potential to double your money. The best part is, this could happen with or without an airline recovery, but we'll talk much more about their business in a few minutes. Because before we dive into AerSale, I want to go over why I'm personally not investing in some of the biggest airline stocks or ETFs. I don't want to discourage anyone, but I do want to highlight some of the risks that people may not be considering. Then I'll give you an overview of AerSale, which will include what they do as a business and what their opportunities are going into 2021 and beyond. Lastly, we'll be diving deep into some potential price targets for the stock to figure out if there is indeed a good opportunity for investors. If you like where this is going, go ahead and hit subscribe, leave a like if you're feeling generous, and stay tuned. So for starters, let me share why I'm staying out of some of these popular airline stocks and funds right now. This really comes down to three main factors: the rebound in stock prices that's already happened, the amount of debt that airlines now have on their balance sheets, and the fact that a full recovery may take some time. As I mentioned earlier, investors are already betting on an airline recovery, and we can see how this has affected stocks in the last few months. When news about the vaccine broke back in November, airline stocks and related funds enjoyed a quick jump back towards the normal levels. This clearly impacted most airline stocks, as the JETS ETF jumped a good 30 to 40% on the news. Now, this isn't anywhere near the pre-coronavirus levels, but that's still a considerable increase. Since the rebound for airline stocks has already begun to a certain extent, it just means there's less upside moving forward. And this concern becomes greater when you consider my next 2 points. The second reason is the amount of debt that airlines have accumulated throughout the pandemic. According to the Motley Fool, the airline industry as a whole raised over $50 billion in the form of equity and debt financing. So these businesses have either diluted their shares by issuing additional stock, added debt to their balance sheet, or both. By issuing new stock, there are more outstanding shares in the market than before. This means that if the airlines produce the same amount of earnings as they did before COVID, investors will actually see lower earnings per share. This could potentially result in a lesser upside in price, as a drop in earnings per share is not an attractive signal. Additional debt will also hurt these airlines because it's only going to add to their liabilities, decrease the cash they have available, and generally make them less flexible. Even if these debts are long-term obligations, it's something they'll have to deal with eventually. This could grow into a particularly bad problem for the industry if a full recovery takes them longer than expected. Which brings me to my last point, and that is that it's difficult to determine exactly how long it will take for airlines to fully recover. Even if we were all able to hop on flights and book our tickets tomorrow, these businesses have a long way to go to restore their operations to pre-COVID conditions. They'll need to rehire the thousands of employees they laid off. They'll also need to make up for over a year of lost activity and pay back all the debt they took out along the way. The CEO of Southwest Airlines, Gary Kelly, said he believes business travel could take as long as 10 years to fully recover. And this is coming from a company who, according to this Motley Fool contributor, has the healthiest balance sheet in the industry. So with all these things considered, betting on the common airline stocks and funds doesn't give me much confidence. They've got a long way to go, and with the vaccine news already being priced into these stocks, I don't think I want to take the chance on waiting around for the rest of the recovery. With my view so far, you may be wondering why I'm feeling so confident about AerSale. The truth is, AerSale is one of the only businesses taking advantage of the current market conditions and positioning themselves for explosive growth in the coming years. To understand this further, let's dive into the basic overview of their business. According to their website, which I'll link in the description, they sell, lease, and exchange used aircrafts and aircraft components. They also help maintain, service, and overhaul aircrafts with aftermarket parts. Additionally, they offer services to anyone who owns end-of-life aircrafts, otherwise known as retired aircrafts. This all sounds kind of vague, but it's just because they have a role in so many different segments of the industry. To break this down further and help us all understand where exactly they make their money, I'm going to refer to a lot of information in their latest investor presentation, which is from September 2020. I'm sure we'll get another one soon, but this is all we've got for now, and I'll link it down below if you want to dig deeper yourself. We'll start with this slide, which breaks down the value of their business segments into 4 distinct parts. The first is USM, or Used Serviceable Material, which is basically just used aircraft parts and flight equipment sales. This segment focuses on selling aircrafts and spare parts. The next is Engine and Aircraft Management. This is the segment that deals with acquiring new aircrafts, either to lease out or to disassemble for parts. They have ownership of tons of facilities that enable them to store planes, service planes, and so on, so they're able to keep costs low by handling everything they would ever need in-house. The next segment is Aircraft and Components MRO, which is maintenance, repair, and overhaul. So this is the segment that is actually getting hands-on with aircrafts. This segment has some really cool things going on. First, they're repairing planes and installing aftermarket parts at a lower cost than what it would cost for clients to go directly to manufacturers. They're able to keep costs really competitive because they're supplying their own aftermarket parts, which were acquired and managed by the prior segments we just looked at. This segment also deals with the storage of client aircrafts. As you can imagine, COVID led to a record increase in parked aircrafts, so this is something that's brought nice profits to AerSale during a tough time for the industry. The last segment is what they call engineered solutions. Essentially, these are new technologies that AerSale has developed to be installed in a variety of aircrafts. These technologies provide functions and features that are required by the FAA and other regulators in the industry. Planes will need these technologies one way or another, but again, AerSale offers these at a competitive discount to manufacturers, giving clients a cheaper option for keeping their planes running safely and in compliance with industry regulations. And that should cover just about everything that AerSale is involved with. So now we understand the business a little better, we need to take a look at the opportunities they have to deliver growth for investors. In their presentation, they've highlighted 6 different opportunities in the current market that they'll be able to capitalize on. I'll run through each of these and reference other data in their presentation to give you guys a full picture. First is that their aftermarket replacement parts are going to be in high demand, and they're in a great position to acquire more of them to fulfill that demand. We mentioned that there are record levels of parked aircrafts because of the recent lack of demand for passenger flights. When passenger flights return, all of these aircrafts are going to require servicing and inspection before returning to operation. The airlines that own these aircrafts, as we mentioned earlier, are dealing with significant debt. They'll need to cut costs wherever they can, and choosing AerSale's cost-efficient parts is one way they can do that. To supply this demand, AerSale is prepared to acquire newly retired aircrafts. According to the research, there's an increasing number of retiring aircrafts in the coming years. They'll be able to acquire these aircrafts at low prices, disassemble them, and then turn around and use those parts to repair customer aircrafts. To put this simply, more planes back in the sky means a lot of business for AerSale, and they're ready to deliver. The next opportunity is with their leasing business, which they also expect to grow with renewed travel activity. They believe that leased engines will be in high demand because businesses would rather quickly acquire a short-term lease than wait and pay for their currently stored aircrafts to be inspected and repaired. Next is the overall MRO market, which again is maintenance, repair, and overhaul, and the storage of aircrafts. Again, the record number of parked aircrafts has been profitable for AerSale, and this is cool because if airline travel is delayed any longer for any reason, this will continue to deliver an additional source of revenue for the business. The MRO market as a whole is expected to grow 5% annually, so AerSale will enjoy continued organic growth there. The next opportunity is the growing demand for freighter aircrafts. They attribute this to the combined increase in e-commerce activities and the recent lack of passenger flights. Both of these trends have created a surge in demand for cargo-dedicated aircrafts. AerSale profits from this because they offer conversion services that transform planes from passenger planes to cargo planes. This is clearly a focus for them as they just released news in early January that they're converting 24 of their own Boeing aircrafts from passenger planes to freighter planes. The next opportunity is more a result of market conditions. They point out that many businesses have overextended themselves and find themselves in tight financial situations. This will limit other businesses' opportunities in the short term, leaving those opportunities open for AerSale to take advantage of. Similarly, AerSale will be able to acquire various assets at great prices because businesses are hard-pressed for cash and looking to sell off some of those assets. And that goes hand in hand with the last and perhaps biggest advantage that AerSale has. They've been cash flow positive for every month during the pandemic, and they're completely debt-free at the time of this presentation. And this is huge. In a time where other businesses in the industry are drowning in debt, AerSale isn't leveraged a bit. This is attractive for any business, but especially one that is looking to move fast and adapt to the demands of an airline recovery. Without any current debt, they have complete flexibility to focus on whatever areas provide the greatest opportunity. If they need to use leverage to make even bigger moves or acquisitions, they have the balance sheet to do it. While others in the industry have been struggling to stay afloat, AerSale has been putting things in place to dominate the industry when things return to normal. And that's why I'm so excited about what this business will be able to accomplish throughout 2021 and the years that follow. But we still have to talk about one thing, and that's price. As I mentioned at the beginning of this video, an analyst on Seeking Alpha is predicting 100% upside for this stock. At the time of his article, the stock was trading around $12, and he anticipated a fair value between $18 and $24 in the coming year. That article is what initially got me interested in AerSale stock, but I knew I needed to do the research myself before I could feel comfortable investing. After taking a look at the business, which is all the information I just shared with you, I do feel confident that AerSale will have a successful 2021. But I wanted to dig deeper to determine a price range that I was comfortable buying the stock in. And to do this, we're going to look at something called the EV multiple, or the enterprise multiple. This is a formula that is calculated by dividing the enterprise value by EBITDA. I'm going to break down both of these because they'll be important in a minute. Enterprise value is basically how much a company is worth. It starts by calculating the market capitalization of the company, then also considers their debt and how much cash they're holding. AerSale has calculated their enterprise value to be approximately $300 million. EBITDA stands for earnings before interest, taxes, debt, and amortization. It's important to use EBITDA for this particular business because aircrafts have long lifespans that need to be properly accounted for over time. So the amortization or depreciation of these assets is key to comparing the valuation of companies in this space, and that's why we're not looking at a simpler earnings formula. AerSale has calculated their EBITDA to be $42 million in 2020, with an estimated increase to $54 million in 2021. With these numbers, we can figure out the EV multiple of AerSale and compare it to other businesses in the space. By doing so, we'll see how much investors are generally paying for stocks in this industry. If the EV multiple of AerSale is below the industry average, we can assume that the stock is undervalued and has upside potential. So with $300 million of enterprise value and $42 million in EBITDA, we get an EV multiple of 7.14 for 2020. Using the $54 million of estimated EBITDA in 2021, we get an EV multiple of 5.5. In their presentation, AerSale compares their 2021 EV multiple to other businesses in the industry. And as you can see, there are multiple businesses in the space, and AerSale has the lowest EV multiple of all of them. This shows that as the business stands right now, the stock is trading at a discount compared to other businesses in the industry. And this is where the idea of 100% upside comes from. The industry average for an EV multiple is about 11, which is twice as much as AerSale's reported EV multiple of 5.5. If all things remain constant and investors begin valuing AerSale stock near the average EV multiple for the industry, we would expect the stock price to roughly double from the $10 they use to calculate these numbers to about $20 as the EV multiple doubles from 5.5 to 11. Of course, this is purely a rough estimate and is nothing more than theoretical. For a better idea, we can keep these numbers constant and calculate the estimated stock price at various enterprise values. At the industry average of 11, with the estimated EBITDA of $54 million in the denominator, we get an enterprise value of $594 million. Then we have to add back the $128 million that AerSale holds in cash, which gives us a market capitalization of $722 million. By dividing this by the 42.7 million outstanding shares, we arrive at an estimated stock value of $16.90 when this stock trades at industry average valuations. So there you go. According to 2021 estimates, AerSale should be valued around $17 in 2021. This isn't quite the 100% upside that was discussed in the Seeking Alpha article, but with prices bouncing between $15 and $16 around the time of this video, it might be pretty accurate. But I think there are reasons to believe why the fair value of the stock may be higher than predicted in this presentation. Keep in mind, this presentation was given in September 2020. Just 1 month later, in October 2020, they released a statement that they expected to exceed their previous estimates for EBITDA in 2020 and 2021. A larger EBITDA would give AerSale a smaller EV multiple, which means they continue to be undervalued in comparison to their peers. So while we don't have exact numbers to play around with for 2021, we know they're going to be greater than the $54 million we used to estimate the stock value a moment ago. So that $17 price target could actually be a bit higher. If you want to extend your time frame a little bit, the estimated EBITDA for 2022 is over $100 million. Just for fun, if we calculate the industry average EV multiple of 11 and the EBITDA of $101 million, we get an enterprise value of $1.1 billion. Add back in the cash and divide by the 42.7 million outstanding shares, and we get an estimated stock price of closer to $30 for 2022. Of course, this is just a quick and simple calculation that doesn't account for any unexpected business activity over the next 2 years, so keep that in mind. But that said, if anything, AerSale has positioned itself to over-deliver in the coming years, and I think that could bring big things to its stock price. We may not see 100% upside in 2021 at current prices, but if they are successful throughout the aviation recovery like they're planning to be, I think we could easily see that by the end of 2022 and into 2023. In conclusion, my plan is to continue adding to my AerSale position as long as the stock remains under $17, but I've been particularly excited about getting in under $15, which I've been able to do a few times so far. My strategy is based on the estimates we discussed earlier and some of the opportunities that I think could pay off bigger than expected for AerSale this year. I'll also be monitoring their quarterly reports throughout this year in particular, just in case I need to ease off or get more aggressive over time. Please don't make a decision to trade this stock based on this video, but instead refer to the sources in the description to do your own research and figure out if this decision is right for you. And just as a warning, the stock has had pretty low volume lately, and as a recent SPAC stock, it's more volatile than other stocks in the market. If you have any thoughts about AerSale stock or the aviation industry as a whole, I'd love to hear from you in the comments. And if you enjoyed this breakdown, be sure to subscribe to the channel. Happy investing, and I'll see you next week.